Hello, ladies and gentlemen. Good morning to you. Let's confirm we're on the same page here. So, if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get the session started. So, let's see what we have right here in the comment section as we prepare to start another promising live session this morning. Okay, all right. We have Carrie in the house. Good morning, Carrie. Thank you very much for that confirmation. All right. Good morning, Sapphire34. Good morning to you. Thank you, Esabet. All right. I hope I pronounced that appropriately. Okay, 159 says is new here. Glad to have you around, and I hope that you stay you hang around so that you don't miss out on any of the ideas we shall be dishing out during the live session today. Who else do we have here? Guston, good morning. All right. All right. I want to take this as a confirmation that we are good to go. You can hear me clearly and you can see my screen very well. I'm excited to welcome you to another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, as usual, we are going to be reviewing the pairs we have been monitoring. Yesterday, we were able to review about 5 to 6 pairs. And obviously, the first thing we are going to be doing this morning is to review the pairs. Let's see how well the pairs are doing and what our next line of action will be for today. But before we go into the market, it's appropriate that we go through the economic calendar as we have some major macroeconomic event coming up today. And from my opinion, this event is likely going to be bringing some liquidity into the market, and obviously this will be driving price movement, and I'm of the opinion that this movement is going to be very huge. And what we want to be doing now is to position ourselves in such a way that we will be able to catch that move when it finally happens. So right here on the economic calendar, we have in fact, we have the Bank of England's governors going to be having a speech. All of them are right now at the International Symposium on Central Bank Independence, and they will be having a speech. The Bank of England's governor is going to be having a speech in the next 2 minutes. The Bank of Japan's governor also will be having a speech also in the next 2 minutes as well. Then we also have the first Chairman Powell's speech coming up in, let's say, 3 hours from now. So definitely everyone in the market right now will be anticipating this event, and obviously we are beginning to see the reflection of this anticipation on the chart as price action. And in that regard, we shall be scaling into the chart right now. Let us see what is really going on in the market right now so that we can position ourselves appropriately to be able to catch that move when it happens. So the first commodity we are going to be looking at this morning is the US oil. And on the US oil, as at yesterday, we were in this position right above the $75 level here. We took advantage of this opportunity as soon as price broke out of the $75 area. Remember, we had the simple structure here since last week where we said price has been caught within a consolidation phase between the $75 level. So we had the resistance point here since last week, and then we had the support level at the $73 area. And whenever we have a simple flat channel like this, we want to be patient to wait out for either a breakout of the channel to give us an opportunity to buy, or a breakdown of the channel to give us an opportunity to sell. And with the current structure we have here, yesterday we saw the breakout of the $75 level after a huge bullish gap. We saw the breakout of that structure, and we were able to take advantage of that move all the way into the $77 area with over 180 pips in profit as price action moved in our direction. And remember, yesterday I told you how important the $77 level is, that we want to be patient enough to see how price action will be reacting to that structure in order to decide if we are going to be buying or selling at that point. And one thing I stated here, that as soon as price gets into this area, we are going to be looking out for two things, and these are: if we start seeing selling pressure below the structure, we want to be joining that decline to the downside, and if a breakout of the structure happens, we want to be adding more position to our existing trade to the upside. And the former is what happened here. We saw selling pressure right below the $77 level, and in fact we had a consolidation phase which lasted about 6-7 hours, giving us a lot of time to anticipate that possible entry around that area. And what happened was that we had that consolidation phase between the $76.65 level, which acted as the resistance level of that channel, and then we also had the support level of the channel sitting somewhere around the $76.20 area. And as a result of this, a breakdown of such a channel will definitely give us an opportunity to join a decline to the downside, and this is exactly what happened. Price action broke down the $76 level the second time, as price continued to roll all the way down with over 200 pips in profit at this point. For those who are taking advantage of that move, kudos to you for being on standby to catch that move when it happened. Then another situation happened here yesterday. Yesterday, late into the New York session, a breakdown retest of the $75 level, and then we also had added another position into the structure, as we had about 70 pips thereabout before price action came back this morning to take us out of this position, as it came back to do a retest of the $75 level. So for the US oil in the last 24 hours, we have been quite profitable here. And what is going to be our next line of action as we head into the New York session today? Well, the first thing I will be advised we want to be doing right now is to scale up to the daily time frame, where we want to be taking an holistic view of what is really going on in this market before we dive back into the lower time frame to make a decision for today. And for the sake of those who are not part of the live session yesterday, this is a very good opportunity to be part of the analysis we had yesterday. And in that regard, we shall be scaling up into the daily time frame. Let's quickly run through the structure we have there on the daily time frame. So right here on the daily time frame, we discussed this yesterday, and the first thing we observed in the last 6 months here is that price action has been on a bearish momentum, and as a result of this bearish momentum, we were able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen right now. And with that bearish trend line, what this simply tells us is that there is some level of selling momentum in this market. That is, sellers are still very strong in this market as long as we continue to find lower lows on the structure. Now, when we zoom into the structure in the last 3 to 4 months, we notice that there was a little bit of consolidation phase between the $93.50 level. As you can see here, the second touch of this level shares a confluence with that bearish trend line to emphasize the strength of the sellers at this point. Then also we have the support level of this consolidation phase sitting somewhere around the $75 area. And not until the first week of the month of December, that was last month, we saw the breakdown of the $75 level to emphasize the strength of the sellers at this point. And this followed the rejection of the $80 level. So we have in the $80 level as a major key level that we shall be using to guide trading activities for this year. Price action closed at the $80 level last year, and at the beginning of this year we saw this rejection of the $80 level, and we were lucky enough to catch that move all the way down, which gave us over 1,000 pips as we were able to add some multiple entries at that point in time. And price action moved into the $73 level, and since price tested the $73 area here, we have been witnessing buy pressure come in from that structure. So the lowest point price has been in the last 6 months is the $70 level here, which we were able to identify, and we have a low here which gives us a sign that price is unable to break the previous low. And at this point, there is a tendency that we could be having a bullish momentum come in from this current structure that we have here. Now, looking at the bearish momentum that happened last week, breaking down the $75 level, remember how important we said the $75 level is. Look at what happened here. Prior to the breakdown of that structure, it has been holding by bullish momentum here. We have a memory for buying power around that area. We saw the first breakdown of that structure. We saw the second breakdown of that structure last week. And from a technical standpoint, whenever we have a breakdown of a structure like this, there is a tendency that price might likely come back to do a retest of that structure to incite another wave of bearish momentum. That is one possibility that we were looking forward to at the beginning of this week. And the other thing that could happen here is that price might climb up the $75 area, come back into the $80 area, an area which shares a confluence with that bearish trend line we identified earlier, to probably incite another wave of bearish momentum, or we could have a breakout of that structure to incite a bullish momentum at this point. So right now we are at a very critical point in this market as price action remain right below the $75 level, and considering the buy pressure we have been witnessing here, as soon as price tested the $73 area, we might be having a buy position coming in, and this might likely evolve into the breakout retest of the $75 level to incite this bullish move to the upside. So in this regard, we shall be scaling down to the lower time frame to really understand what has really been going on around that area. And remember, we were able to take advantage of some buy position here yesterday, which gave us about over 100 pips, over 180 pips in profit before we started seeing some bearish momentum come in. So in that regard, we shall be scaling down to the 1 hour time frame where we are going to be making a decision for today. So right now we are back at the 1 hour time frame, and this is what we had here since the beginning of the week. We saw the breakout of the $75 level here, which gave us that leverage to join that bullish momentum that I said gave us about 140 pips thereabout before this bearish momentum happened. And with the current structure we have here, we have a situation where price has actually come back into the structure where price action started the week, and that is the $74.50 level. And remember, we identified the structure yesterday, and what did we call it? We call it our support level for this week. And right now you saw that as soon as price came to test the $74.50 level during the early hours of today, we have been witnessing buy pressure coming from that structure. And in that regard, if we look at this very well, let me zoom in so that we can see things clearly. That since the test of the $74.50 level, we have something that looks like a flat channel here where price has been consolidating between the $75 level and the $74.50 area. And from a technical standpoint, whenever we have a flat channel like this, we are going to remain patient while we wait for a signal to come in the form of either a breakdown of that $74.50 level to give us an opportunity to sell, or a breakout of the $75 area to give us an opportunity to buy. And following the continued buy pressure from this level, the tendency of a buy momentum here is very, very high. And look at what we had here. This is where price started this week with the bullish momentum right from the $74.50 level. And in the last 7 to 8 hours now, we have been witnessing buy pressure coming from that area, and that's a huge sign that we are going to be probably going through a bullish momentum, another second wave of bullish momentum from this level. So what we are going to be looking forward to at this point is price breaking out of the $75 level, and when we scale down to a lower time frame, we look out for retest of structure to give us that confirmation to join that rally to the upside. So that is what we are going to be looking at right now. And one thing I did a couple of hours ago was to scale down to my lower time frame. I want to see what is really going on around this level, and I would like to show you what I saw. So when I scale down to my 15 minutes time frame here, though we have been seeing some selling pressure coming again at the $75 level, but we cannot ignore the importance of this bullish engulfing candle that we have here. So in that regard, I was able to identify a structure here somewhere right around the $74.80 level, which I'm suggesting we are going to be using as a yardstick for trading activity for today. And for the sake of clarity, I would like to label this so that we can have a visual understanding of what is going on right now. So we have the breakout of that $74.80 level following our multiple rejection by the sellers. So we saw the breakout of that structure, and there is a likelihood that price might likely come back to do a retest of the structure before the incitation of another wave of bullish momentum. So what this simply means is that as long as price remains above the $74.80 level, we want to remain comfortable in our buy position. Now, the next question we will be asking is, what if price does not come back down into the structure and instead it continues to find higher highs? Are we going to miss out on this opportunity? And the answer is no. One thing we are going to be doing here is, if price does not come back into the $74.80 level to incite another wave of bullish momentum, then we want to be positioning ourselves right above the $75 level, where a breakout retest on our lower time frame, we might not be lucky enough to see buy pressure coming around this area. Then we want to be joining that rally to the upside. So what we am saying right simply is this: above the $74.80 level and above the $75 area is most appropriate for us to be buying the US oil for today. And the other scenario that I said here is that if at any point in time while in our buy position and price takes us out of that buy position, going into the $74.50 level, breaks down the support level, remember that is the support level for this week, breaks down that structure, followed by selling pressure below the structure, then we will have no choice but to anticipate selling opportunities below that level. So at this point in time, everything is still looking very bullish here as price action continues to find buy pressure right around the $74.50 level. So like I said, we continue to look out for buy pressure above both the $74.80 and the $75 area as we head into the New York session today. And where will our take profit target be if we buy right above the $75 area? Well, if we scale up a little bit into a higher time frame, and for this instance I will be choosing the 4 hours time frame, the first thing we would observe here is that we have the $80 level, which has been a major key level for participants in this market in the last hold on a second, sorry about that. So we will understand that the $80 level has been a major key level, and in fact it has been a strong selling niche for participants in this market. As you can see, what happened here, as soon as price comes into the structure, we saw selling niche around that area. And during the first day of this year, we saw selling pressure come in from that area. So we should be having our take profit target sitting somewhere around here between the 80, it could be the 79, 80, $82 area. Let's place our take profit target somewhere around that area. And one thing about that structure also is the fact that it shares a confluence with this bullish trend line that was broken during the course of last week trading session. So we might likely see price come back to do a retest of that structure, probably to incite another wave of bearish momentum. Or if price breaks out of the $80 level, then that will be giving us a good sign to add more position to our existing trade. So at this point in time, let's have our TP target around the $80 level. Now, and there is a catch to this when our TP target sits there. That is the $77 area. Do you remember how important we said this is? It has been a strong demand zone in the past before it was broken last week. So we saw the breakdown of that structure, and look at what happened here yesterday. We saw selling pressure coming around that $77 level. So if bullish momentum comes in above the $75 area and it continues to climb to the upside here and it gets into the $77 area, the next thing we want to be doing is to move our stop loss accordingly, lock in some profit, and let's wait out to see how price action will react to the $77 level. And what we are going to be looking forward to here is either price rejects that level to form selling pressure on our lower time frame, then we might likely be getting ready, just as we did yesterday, to join that decline to the downside. But instead, if price breaks out of the $77 level, that will be giving us a good opportunity to add more position to our buy trade as we continue to monitor price action as it approaches our TP target around the $80 level. So that is my scenario here on the US oil. If you have any questions whatsoever regarding what I just explained here, I will be glad if you drop it in the comment section, and I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions whatsoever before we move on to the next option. So let's see what is happening right here in the comment section. All right, so we have 603. Good morning, 603. Glad to have you around. Compliments of the season. 603, good morning. 5114, good morning to you. All right. Okay, so in the absence of no questions, I want to assume that we are on the same page here. So let's move on to the next option. And the next option we are going to be looking at this morning is the US Tech. And in fact, the US Tech is our trade, is the most profitable trade we have had so far for this week, as we had a situation where price broke out of the $11,100 level and price action moved over 200 pips in our direction. So what did we see here yesterday that made us to anticipate this position? So this is what we had here at the beginning of the week. We saw a situation where price action was caught within a channel, and that was the $11,100 level here, which was serving as the resistance point of that channel. And then we had the support level sitting somewhere around the $11,050 level. And you know what we do here whenever we have this kind of structure, a flat channel like this, will remain patient, wait out for either a breakdown of this channel to give us an opportunity to sell, or a breakout of the channel to give us an opportunity to buy. And this is what happened yesterday. We saw the breakout of the 11,100 during the first couple of hours of the New York session yesterday to give us that leverage to buy the US tech. And congratulations to those who are taking advantage of this opportunity yesterday, as you would have made at least 200 pips in profit yesterday. And yesterday as well, as soon as price tested the $11,300 area, we started seeing certain pressure from that area, where I was able to identify a structure around the 11,250. Personally, I missed this opportunity anyways, but for those who are taking advantage, if you are taking advantage of that, very well done to you, as you will currently be in about let's see how many pips is that, about 200, close to 200 thereabout on this one. So now that we have the situation here, what is our next plan? What we will be planning to do for today as we head into the New York session? Well, for the sake of those who are not part of the live session yesterday, and for the sake of having a holistic view of what is really going on in this market, we shall be scaling up to the daily time frame. Let's quickly have a view of what's really going on that time frame. Then we come back to the lower time frame to decide on what our next line of action will be. And in addition to that, I also want to let us be aware of how important these key structures are on the daily time frame, and these are the structures that are driving our decision on buying the US tech yesterday. So this is what we have here on the daily time frame, and from an holistic point of view, and if you look at what has been happening here in the last 1 year, you will notice that price action has been bearish, and as a result of this, we had this bearish trend line here figured out after connecting the series of lower highs, and this is an evidence that sellers are very strong in this market. However, things got a little bit interesting in the month of June last year. As we can see, if we zoom into the $11,000 level here, we saw that every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. So what happened here is that as soon as sellers brought price into the $11,000 level, participants in this market felt it cheap enough to buy the US tech. So we saw the buying attempt here in the month of June, and when we fast forward to the month of the later part of the month of September stroke the early days of October, we saw buy pressure coming again at the $11,000 level to push price to the upside. But unfortunately, the sellers were so strong, as we had a selling bust up around the 11,700, negating all buy pressure one more time to push price to the downside. Though we had some breakouts of the structure, but it didn't hold that much, as we saw price dropped again back into that zone again, which is close to the $11,000 level. So right now, I told you at the beginning of this year that we shall be using the $11,000 area to guide our trading activities, as we continue to look out for buying opportunity right above that structure. And one thing about this current structure here, if we look at it critically well, and considering what has been happening here since the second week of the month of December, what we have here is an impulsive move that tested that bearish trend line the last time that price action tested that bearish trend line. We saw this bearish impulsive move that took price right back into the $10,600 level, that demand zone that we have there. And what we saw here is a situation where price transition into something that looks like a reversal pattern. As you can see here, price has continued to reject the $10,600 level to give us a clue of how strong that level is. As you can see, that level also has a memory for buying power. And what happened here on Friday shows that sellers are unable to break the previous low, giving us a clue, giving us a higher low and a a signal that buyers are very strong at this point. So with a reversal pattern here in the form of a double bottom structure, the next thing we want to be doing whenever we identify a reversal pattern as this is to look out for the neckline of that reversal pattern, as that neckline shall be the basis, shall be a platform for trading activity. And look at what happened here. The neckline shares a confluence with that $11,000 level, which we said is an important structure to look out for this year. So we saw the breakout of that structure, a very good sign that this reversal pattern is a mature one. So what we are going to be doing going forward from this point is to continue to look out for buying opportunity right above the $11,000 area. So as long as price remain above the $11,000 level here, we want to remain very comfortable in our buy position on the US tech. So with this information we have here, let's scale back down to the lower time frame, that is the 1 hour time frame. Let's see how price action is reacting to this current structure. Remember, we took advantage of some buy position here yesterday and some selling opportunity. Let's see how price action is still reacting to the $11,000 level to decide if we continue to hold on to our buy position. So with this point in view, let's scale down to our lower time frame, and that is the 1 hour time frame. So right back to the 1 hour time frame, what can we see here on the 1 hour time frame? So this is the 1 hour time frame once again, and we are about to make a decision for today. So like I said earlier, we had this position figured out yesterday, and remember that is the $11,000 level, that important structure we identified on the daily time frame. And at this point in time, price is still trading above that $11,000 level to give us that comfort that being in a buy position here is very reasonable. And in addition to that $11,000 level is this trend line I was able to identify during the early hours of today. And in fact, we can see our participants in this market has been the psychology in this market has been respecting that trend line, as you can see here. During the first week, last week, we saw how this level was selling pressure. We saw the breakout of the structure on Friday, and since the breakout here on Friday, price has remained above that structure. And during the early hours of this week, we saw how the $11,050 level has been holding by pressure. So what happened here when price came back into the structure, that trend line shares a beautiful confluence with the 11,050 to give us a sign that buyers are still strong in this market. And look at what happened here. We can see sharp rejection of the structure. And at this point in time, the 11,100, the breakout of the 11,100 level seems most appropriate to join that rally to the upside. So I had a buy stop here, and it has been triggered at this point. As you can see, price is running in our favor right now. And for those who are taking advantage of this move, kudos to you for being on standby to catch this move, as you will currently be running with about 30 pips in profit at this point. So buying above the 11,100 at this point, it's a risk worth taking considering the fact that we are on this bullish trend line. So going into the New York session today, we have two structures that will be guiding our trading activity. The first one is the 11,100, the structure here that is broken the second time this week. As you can see here, that is the first structure that will be guiding our trading activity. And then the second structure is this trend line that we have here. So as long as price action remains above both the structures here, we want to be comfortable in our buy position on this one. And for those who had missed out on the breakout of the 11,100, you could still buy anytime here. But if you are the patient one, then you might likely want to wait out for a retest of structure. Probably price will come back, do some retest on this bullish trend line with bullish momentum on our lower time frame. Then we could actually join a trend continuation to the upside. Now, if price continues to the upside accordingly, just as projected here, there is a catch here I want to call our attention to, and that is somewhere around the 11,200 and let's see, around 230 thereabouts. So for the sake of clarity here, I would like to label it so that we can have a visual understanding of what we are talking about here. So we have the 11,230 and 11,250 area. So how is this important to our position during the New York session? So if the buy position continues to ride all the way up here, then as soon as price gets into the zone that is between the 11,250 and 11,230, what we want to be doing is to move our stop loss, lock in some profit, probably somewhere around the 11,180, somewhere below that area, lock in some profit, and let's wait out to see how price action is going to be reacting to the structure to decide if we are going to be adding more position to our buy trade, or we are going to be getting ready to join that decline to the downside. So one thing we are going to be looking forward to as soon as price gets here, lock in some profit, and let's wait out and see what happens around here. So if it happens in such a way that we have a breakout of this channel of the zone here with buy pressure right above or around this level, then we want to be adding more position to our existing trade. And if a further breakout of the 11,300 level happens, then we want to be adding another position around that area. Now, the contrary is this. If price gets into the zone here between the 11,230 and 11,250, and instead of breaking out of that structure, we start seeing selling pressure around this area on our lower time frame, it could transition into a double top structure. It could be a head and shoulder pattern, a rising wedge, whatever it is, and a breakout retest of structure on our lower time frame, then this might likely be the beginning of a sell-off that could happen here, as price action will be unable to break above the previous structure here, giving us a sign that sellers are gradually coming into this market. And if that happens, we want to be joining that decline to the downside. And if a further breakdown of this bullish trend line I identified earlier here, which I said will be guiding our trading activity for this week, a breakdown of that level happens, then selling pressure below that structure should be giving us an opportunity to sell the US, add more position to our sell trade. So these are my views here on the US tech here. So I would advise us to be on standby so that we can catch that move when it happens. And another thing is that you can screenshot my screen so that you can use it as a reference point when you are managing your trade on this commodity we just talked about here. So that is my view here on the US tech. If you have any questions whatsoever, feel free to drop your inquiries in the comment section as usual. So let me quickly run through the charts here and see if there are any questions before we move on to the next pair. So here on the comment section, I have 481. Okay, oil is going. Okay, no problem. All right, 981 is asking oil position. Please, we treated oil a couple, I think about 10 minutes ago. We talked about the oil, the US oil, and if you had missed out on that analysis, well, I would advise you to stay tuned in to the end of the session when I will be doing a recap of all we talked about today. So try to stay tuned in so that you don't miss out on that recap and summary of what we talked about today. So who else do we have here? Okay, Cairo Karim, good morning to you. Okay, 981, hello. All right, in the absence of no questions here, I guess we are on the same page, so I will have no choice but to move on to the next pair. So the next pair we are going to be looking at this morning is the USDJPY, and on the USDJPY we really do not have a new development here, as price has been caught within a consolidation phase, hereby emphasizing the indecision in this market. Now, remember, we took advantage of some buy position here yesterday, had the breakout of the 132.250, and we moved our stop loss to break even, and we were taken out of that position at break even right now. And since then, price has been caught within that consolidation phase here, giving us a huge indecision at this particular point in time. And what this simply means is that participants here are still very indecisive and there is a likelihood that participants are waiting for a catalyst that will be bringing some liquidity into this market to drive price movement. And like I told you at the beginning of the session, we are anticipating the first chairman speech coming up in 2 hours 15 minutes from now, and I'm of the opinion that this is likely going to be bringing some liquidity into the market. So we want to be positioning ourselves in such a way that we will be catching that move when it happens. So at this point in time, we still have this channel here between the 132.250 level and the 131.350 area since the beginning of the week. Before we go into the details here, let's quickly run through the daily time frame. Let's have an holistic view of what is really going on in this market. Then we come back down to the 1 hour time frame to make a decision for today. So right here we are on the 1 hour time frame. So for the sake of the session, I will just zoom into the current structure here, and the current structure we have here is the 131.00 level. And one thing I stated here at the beginning of the year is that the 131.00 level will be our yardstick for trading activities for this year. As you can see, how this level has been a major determinant of price action in the last 6 months here. Look at what happened here in the month of May. We saw our selling pressure came in below that structure here, and then if we fast forward into the month of June, we saw the breakout of that structure. And since the breakout of that structure happened here in the month of June, price has continued to remain above that structure, has every attempt by the sellers to break down this level has been met with strong resistance from the buyers. Look at what happened here in the month of June. Look at what happened here again in the month of August, and see what happened here in the month of December last year. And then at the beginning of this year, we saw another buy pressure. Remember, we took advantage of this move all the way into the 135 Japanese yen level. And at this point in time, what is going to be our plan? Well, with the current structure we have here, as long as price remain above the 131 Japanese yen level, we continue to look out for buying opportunity. As you can see here, in the last 6 months, this level has been a strong buying niche for participants in this market. The only thing that could happen here that will make us sell the USDJPY is if we see an outright breakdown of the 131 Japanese yen level, taking out all the buy position around this level to gain some liquidity to drive price to the downside on this one. So if price does not break down the 131.00 level, I don't think it's appropriate to be selling the USDJPY. That is looking at it from a long-term perspective. Now, in addition to the 131 level here is this bearish trend line that we were able to figure out at the beginning of the week. And look at what we have here since the month of October. When we connect the series of lower highs here, we have a bearish trend line figured out at that point, emphasizing the strength of the sellers at this particular point in time. And look at what happened here on Friday last week. Even though we enjoyed this bullish momentum that started here last week, you saw that as soon as price got into the trend line, we started seeing some selling pressure, giving us a sign that price wants to respect that trend line one more time. And for us to confirm that price action is respecting that trend line one more time, we want to see an outright breakdown of that demand zone. A retest of structure then gives us confirmation that the 131 level is no longer strong for bullish momentum. So at this point in time, like I said, we continue to look out for buy pressure. As you can see in the last couple of days, we have been seeing, let me zoom in so that we can see what I'm talking about here clearly. Let me zoom into that structure. Okay, look at what has been happening here in the last couple of days now. We have been seeing sharp rejection of the 131.500 level. So in this regard, we shall be scaling down to the lower time frame. Let's see what is really happening around the 131.500, and then we identify that structure on the 1 hour time frame and use that as a basis for our trading activity for today. So scaling down to the 1 hour time frame here, let's see what we have here. So remember we said something about the 131.500 level, remember? So let's look at what is happening there. So back to the 1 hour time frame here. And well, look at the structure we have here. Very simple setup. Since the beginning of the year, we have been witnessing some buy pressure. Look at this, the first pivot low and the second pivot low, and we have the third one here. During the early hours of today, we saw the sharp rejection of that level, lining up with that 131.350 level, giving us some tendencies that buyers are still very strong in this market. And then we have the 131.500, which we identified is going to be somewhere around this level. Well, we have something around the 131.350. So let's do some readjustment to fit into that 131.500. So we have something like this, and we shall be doing a relabeling of the structure. So we have the 131.500 here. So since the beginning of the week, we have been witnessing this consolidation phase here between that 131.500 and the 132.250 level. So like I said here, we have a channel, and whenever we have a channel like this, we are looking out for a breakout or breakdown of this channel to give us an opportunity to buy or sell. So if a breakdown of this channel happens here, that is the breakdown of the 131.500, and if you look at that structure, it shares a confluence with this bullish trend line. So if a breakdown happens, that means that that trend line is no longer strong to hold buy pressure any longer, and if that happens, we want to be seeing that as a bearish signal. And if selling pressure continues below that structure in our lower time frame, then we want to be adding more position to our sell position at this point. However, if price breaks out of the 132.250, that is, if we have a breakout of the 132.250 here, and if you look at the structure here, it also shares a confluence with that bearish trend line we identified on the daily time frame. Remember, we identified a bearish trend line on the daily time frame. So if a breakout of that structure happens, let me zoom in so that we can see things clearly. So if a breakout of the trend line and the 132.250 happens, that's going to be a good signal that a bullish momentum is very possible here. So we look out for buy pressure there, then we join that rally to the upside. Then to further buttress the possibility that buyers is likely going to be coming in here, if we look at this impulsive move that started at around the 134.500, and you see here, as soon as price got into the 131.500, we saw a sharp rejection of that level, and then we have this level here. Price was unable to break the previous low, and this could likely turn out to be a reversal pattern where this trend line will be serving as a neckline of that reversal pattern. And if a further breakout of that structure happens, that will be a mature reversal pattern for us to join that bullish momentum to the upside. So I'll be tending towards a bullish momentum here on the USDJPY. So for the USDJPY, I'm looking forward to a bullish momentum here, and if a breakdown happens, the breakdown of the trend line, breakdown of the 131.500, then we will have no choice than to get ready to sell the USDJPY. So from this perspective we have here, we want to buy the USDJPY. So we continue to ride the USDJPY. Price breaks out of the 132.250, and one thing I would like to state here is that as soon as price gets into the 133.400, move your stop loss accordingly, lock in some profit. Let's wait out and see how price action react to the structure to decide if we are going to be adding more position to this trade. So if selling pressure come in here, we might be looking forward to a sell position where price will come back to the retest of the structure to incite another wave of bullish momentum. However, if price breaks out of the 133.400 with buy pressure above the structure, we want to be adding more position to our existing trade with the hopes that price will break out of the 134.500 to add another position to our existing trade on the USDJPY. But if selling pressure comes in here at the 134.500, then we want to be getting ready to sell one more time. And talking about the 134.500 here, I would like to show you how important the 134.500 is on the 4 hours time frame. We identified this on last week, I guess, where we saw that since the breakdown of the 134.500 here in the month of December, we saw that this level has been holding selling pressure. The same thing happened here last week. We saw selling pressure from that level. So it's important we take into consideration how price reacts to the structure to decide if we are going to be adding more position or we are going to be getting ready to sell the USDJPY. So that is that on the USDJPY. If you have any questions, feel free to drop your inquiries in the comment section of this video. So moving on to the next pair here, and that is the XAUUSD. I have 7 more minutes left, and I hope I will be able to run through the last 2 pairs before we call it a day here. So I will quickly do some run through of the XAUUSD right now. So what I'll be doing here is to scale down to the 1 hour time frame. Let's quickly run through what our expectation was on the XAUUSD yesterday. So during the live session yesterday, we had the situation running, and based on the multiple rejection of the 1,880, we were looking forward to selling opportunities. As you can see here, though the week started on a bullish note, this is where price action started this week. Price action started at around the 1,865 level, and we have been witnessing buy pressure since that time. But as soon as price got into the 1,880 level here, we started seeing selling pressure come in from that level to emphasize the some strength for sellers at that particular point in time. And if you look at the structure here, we saw how this week were rejecting this level sharply. And when we bring out our line chart here, we were able to identify lower highs here, and that gave us that bearish trend line that you can see on your screen right now. So to guide our trading activity for today, we have this bearish trend line figured out here, and then we also have this bullish trend line figured out at this point, giving us something like a triangle pattern. And in fact, this emphasizes the consolidation phase here as well, as participants are still very indecisive of where price might be going. So with the current structure we have here, there's a tendency that price could break down that structure to the downside to incite a retracement of that impulsive move that started last week Friday, or we could be having a breakout of that triangle to incite a bullish momentum at this point. So a breakout of this triangle to the upside could incite a bullish momentum at this point. But even if a breakout of that trend line to the upside happens here, we will still have to be very wary of what could likely happen because of this 1,880, which has been a strong selling niche for participants in this market since the beginning of the week. So we already saw a breakout of the trend line here, giving us a clue that buyers are coming in gradually in this market, and coupled with the multiple rejection of the 1,870 level here, giving us a new demand zone around that point, as price action is finding it very difficult to come into the support level at the 1,865. With this situation here, things are looking a little bit bullish for the XAUUSD here, so we might be anticipating to buy the XAUUSD if price action breaks out of the $1,876 level, which I've been able to identify here. So let's see what happens if price breaks out of the 1,876 level. Then we want to be buying the XAUUSD. Now there is one thing I would like to state here, that when we buy the XAUUSD above the 1,876, we want to be moving our stop loss accordingly if price continue to move to the upside. So if price continues to tend towards the upside, we move our stop loss accordingly, lock in some profit, and if it gets into the 1,880, we move our stop loss to break even, lock in some profit there, and wait out to see how price action will react to the $1,880 level. So if price gets into the structure and we start seeing selling pressure come in again, then at this point I will advise us to be selling the XAUUSD, as there is a likelihood that price will be respecting that level one more time, considering the fact that we have a memory for selling power around that area. And if price tends to continue to the downside, breaking down that bullish trend line, selling pressure below the structure should be giving us another opportunity to add more position to our existing trade. With the take profit target sitting somewhere around the 1,860, I think this is going to be considerably okay for us for this week, and that should be giving us about let's see, about close to 2,000 pips if price action get to that level. And if we get to that level, we'll look out to see how price action reacts to that structure. A breakdown should definitely give us an opportunity to add more position to our existing trade. And if buy pressure comes in above the 1,860, we look out for buy opportunity at that point. So at this point in time, situations are looking very bullish at this point. As you can see, we have a new demand zone here, and then price appear to have broken out of this trend line here. So with that regard, we shall be looking forward to buying above the 1,860 and looking out to see how price action reacts to the 1,880. And if a breakout of the 1,880 happens, then that will be a good opportunity for us to add more position to our buy position that we have here. Now, what if price does not go that far? That is, if price does not climb to the upside, does not break above the 1,8760, and instead it breaks down the 1,872, that bullish trend line, then at this point, if that happens, then I will be using this bearish trend line as a yardstick for my selling opportunity here. So if price breaks down, we sell, and if a retest of structure, we look out for another opportunity to add more position to our existing trade on the XAUUSD. So that's the scenario we have here. It's a very simple setup. So I will that will be on standby to catch this move when it happens. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So let's quickly run through the last pair we've been monitoring since the beginning of the week, and that is the GBPUSD. And on the GBPUSD, hold on a second, let's quickly run through what our expectations are here. During the live session yesterday, we were around this area where we said we bought the GBPUSD around this area and then moved our stop loss accordingly, and we were taken out of this position during the later part of the New York session yesterday, after identifying selling pressure come in around the 1.22100 level here. As you can see here, we saw selling pressure come in, and since then price has continued to find lower lows and lower heights. And in that regard, we have this structure here at the 1.21700. Remember, it was a resistant level for this week. Remember, we had this 1.21700 here at the beginning of the week. Remember, we said we have a channel between the 1.20850 and the resistant level of the channel at the 1.21700, which was broken and gave us an opportunity to buy yesterday, and we bought accordingly. But with the situation of things right now, selling pressure brought price back below the 1.21700. And during the early hours of today, we begin to see some buy pressure right above the 1.21500, a strong psychological level for that matter. And that is a sign that buyers are beginning to come in gradually in this market. So in that regard, I want to help us to identify a structure which we shall be using to guide our trading activity for today to make things a little bit simpler for us. I will bring out my line chart here and connect the series of higher lows, just like we did on the XAUUSD. We have a similar setup here with what we have on the XAUUSD, and if we connect the series of higher lows here, we have this bullish trend line, which I will be calling a temporary one at this point, considering the selling pressure we saw at the 1.22100 level here. So what we are going to be doing here, how are we going to be making use of this current structure to guide trading activity here? So in addition to that bullish trend line is that 1.21700 level. So what I'm looking forward to here is to see to continue to look out for buy opportunity if price continued to be above this bullish trend line. So what I'm going to be doing here is to buy if price breaks out of the 1.21850 level here. So this is where I'm going to be buying. So I want to see a further breakout of that structure, buy above this level, and if buy pressure continues, then we continue to hold our buy position. And if a further breakout of the 1.22100 level happens, taking out all the sell position here, then that will be giving us another opportunity to add more position to our existing trade here. So that is how we want to be buying the GBPUSD for today. So above the 1.21850 is an area we are looking forward to buying opportunity on the GBPUSD. Then if we are going to be selling here, what are we going to be looking out for? Like I said, the bullish trend line will continue to guide bullish momentum here. And in addition to that, we have this trend line also to guide selling momentum. As we can see, after connecting the series of lower highs here, we have this trend line. So I want to differentiate this by giving this a more thicker pixel. So we have this here. So this trend line will continue to guide selling pressure. So what we shall be looking forward to here to sell the GBPUSD is to see price break down this trend line. Then if we start seeing selling pressure below the 1.21700, a level which shares a confluence with that bearish trend line, then we get ready to join that decline to the downside. And if a further breakdown of the 1.21500 level happens here, then we want to be adding more position to our existing trade on the GBPUSD. So these are my views here on the GBPUSD. It's a very simple setup here. We look out for buying opportunity above the 1.21850. We look out for selling opportunities below the 1.21700 if price breaks down the bullish trend line that we have here. So on this note, I would want to call it a day. But before I do, let's do a recap of what we talked about today before we drop the curtain on the X-Trend Speed session. So here we have the USOil. The first commodity we talked about today is the USOil. And finally, we have our buy position triggered on the USOil as price action has broken out of the $75 level. And remember, we have our TP target sitting somewhere around the $80 area. I said between the $79 and the $81 area for our TP target. That is a minimum of about 400 pips to a maximum of about 600 pips to catch here if price action continues to the upside. So we already have the breakout of the $75 level, a good signal that buyers are still very strong in this market. Remember, we bought above this level yesterday. So let's see how far this move is going to go. So at this point, move your stop loss to break even, lock in some profit here, and let's wait out to see how far this move is going to go. And I told you, remember I told you how important the $77 level is. A breakout of that structure should be giving us another opportunity to buy, add more position to this buy position that we have here. And to sell the USOil, what I said is that if price takes us out of the buy position here in such a way that it breaks down to $74.50 level, then we want to be looking out for selling opportunities below that structure. But as long as price remain above the $75 area, we remain comfortable in our buy position on the USOil. Then we went on to talk about the US tech here also, where we already in a buy position here, and I was able to identify two parameters here that will be guiding our trading activity. And the first one is the $11,100 level. Like I said, anything above the 11,100 is a good buy for us. And the second one is this bullish trend line here. So the bullish trend line and 11,100 will continue to guide our buy bullish momentum here on the US tech. And if price takes us out of our buy position in such a way that it breaks down the 11,050, then selling pressure below the structure should give us an opportunity to sell the US tech. Then we went on to talk about the USDJPY, where we said we continue to remain patient here as price action continued to oscillate between this channel had the 132.250 and the 131.500. So we said we are waiting for a signal in the form of a breakout of the structure to give us an opportunity to buy, or a breakdown of the structure at the 131.500 to give us an opportunity to sell. So we continue to remain patient here and wait out for either of this to happen before joining either the rally or the decline at this point. Then we went on to talk about the XAUUSD, where I told you that we continue to hold on to our sell position as the selling pressure below the 1,880 level has been pushing price to the downside. However, the appearance of a demand zone here, as we saw, and the bullish trend line here gave us that idea of keeping the possibility of a buy position open with this current structure. And in that regard, we were able to identify a structure at the 1,876 level, where I said we should be buying the XAUUSD right above that structure. And if a further breakout of the $1,880 level, taking out all the sell position here, that will be a good opportunity for us to be adding more position to our existing trade on the XAUUSD. Then the other possible scenario that could happen here for us to sell the XAUUSD, like I said, considering the buy pressure we have been witnessing here in the last 12 to 15 hours here, I want to see price take out all the buy position here by breaking down the structure to the downside, then that will be giving me a signal that sellers have come in. Then a further breakdown of the 1,865 will give us an opportunity to add more position. For the breakdown of the 1,860 will welcome additional position to this trade. So we are still in a sell position here while we wait out to see what happens following the Fed speech coming up in an hour 30 minutes from now. So like I said, above the 1,876 buy position, breakout of the 1,880, had more position to our existing trade. And for us to add more position to the sell trade, we look out for a significant breakdown of that demand zone with selling pressure below the structure. Then we could join that decline to the downside. Then we close the day with the GBPUSD, where we are in a sell position currently, and we were able to identify a simple setup here, and the two parameters we are using to guide our trading activity for today is one, the bullish trend line here, which has continued to hold bullish momentum since the beginning of this week. So I have said that let's wait out and see price action break out of the 1.21850, taking us out of the sell position. Then at that point we want to be buying above that structure, and if a further breakout of the 1.22100 level happens, that is taking out all the sell position here, then we want to be adding more position to the buy position we took advantage of above the 1.21850. Now, to add more position to our sell position, I said if price continues to go to the downside here, breaking down this bullish trend line with selling pressure below the 1.21700, we look out to add more position to our existing trade, and a further breakdown of the strong psychological level at the 1.21500 level should give us an opportunity to add more position to our sell trade. And to make things easy for us, I told you that the bearish trend line here will continue to guide selling opportunities. So what this simply means is that if price continue to trade below this trend line, we remain comfortable in our sell position. So that is that on the GBPUSD. And on this note, I would like to call it a day. Before I do, I used to mention that we don't want to get too excited. Trading is a boring game, it's a boring business. We don't want to get too excited when we cite signals, and signals are always come in the form of a breakout of a structure. And whenever we cite a breakout of a structure like that, we want to be scaling down to the lower time frame immediately to look out for retest of structure supporting the direction of the breakout. Then we want to be seeing that as a confirmation to join that rally or decline. And if a retest does not happen and price continues in the direction of the breakout, it's okay to miss out on that, as there is a lot of opportunity in the financial market that we could take advantage of. So on this note, I want to wish you best of luck during the New York session today, and I hope that we'll be on standby to catch the moves when they finally happen. I'm very sure we are well equipped to meet up with any possible scenario that the market present to us during the New York session, so that we can take advantage of any move that happened. So I wish you best of luck during the New York session once again, and I also look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, where we shall come back here again to review all the instruments we have been monitoring since the beginning of the week, and also plan against the New York session tomorrow. Do have a wonderful evening. Bye bye.